Hi there, my name is Nathan Morris and I'm the Senior Tax Advisor at Morris Accounting. I help employers and business owners increase their wealth and ensuring they save tax along the way. I'm different to most accountants as I actively give clients the opportunity to learn more about how to improve their business and or wealth, and love to work with them more than once a year to help them achieve their goals. Remember, you need to change what you're doing to get different results, so thanks for taking another step by watching this video. Today's video is where you'll learn about how integral tax and investing are. I'll touch on the topics of negative gearing, superannuation, agribusiness and shares. Tax and investing. For most people, the two ways to look at reducing tax are to reduce income and increase deductions. However, there are only so many deductions you can get for work without going broke, and these don't necessarily keep increasing your income. So there are many ways to increase your tax deductions, but in a way that will also increase your wealth over time. These methods include negatively geared real estate, superannuation, agribusiness, and shares and margin lending. So I'm going to go through these now. So first thing I'm going to talk about today is negatively geared real estate. So negative gearing is one of the most effective ways to reduce the amount of tax you pay. Most commonly occurs when you borrow money to purchase an asset, such as an investment property or shares, and the income generated is not enough to cover the interest on the loan. This can be a very effective form of leverage and often results in lowering taxable income. Some of the benefits of investing in real estate are: claim the interest repayments on the loan. The capital growth of property can be concessionally taxed for trust individuals and super funds. And accurate depreciation of investment property can provide you with a lot of tax savings over time, especially with new properties. Now, some old properties can attract depreciation, but it's generally a lot less than the new ones because you can claim the building costs. Now, if you'd like some more information on negative gearing, I do have a separate video on negative gearing, so please check out that video on our website or the article as well. Secondly, superannuation. Superannuation is your investment for your retirement and can be a great way to invest money in a tax-effective way. However, it is important to remember that monies placed into superannuation cannot be accessed until you've reached a minimum age known as preservation age, set aside by law, and if you permanently retire from the workforce. So preservation ages currently range from 55 years to 60 years for people born after 1964. Benefits of investing in superannuation include individuals who are self-employed or own and manage businesses can claim tax deductions. Employees can use salary packaging to obtain effective tax deductions for super and move monies to be invested into a lower tax arena. Claiming tax offsets when making contributions to your spouse or partner super if they earn nothing or have a low income. Again, I've got another separate video on superannuation, got a couple actually, so check out the website and our articles on that too. Agribusiness. Now, agribusiness has gone out of favour lately, but there is a resurgence in agribusiness given the opportunity for development in this area, so I'll keep mentioning agribusiness. So investing in agribusiness is a recognised tax-effective investment that allows individuals to diversify their investment portfolio, thus spreading risk. Agribusiness investments tend to be less influenced by current interest rates, stock market fluctuations, property market, so could result in better returns over time. According to John Sutton, Executive General Manager of Agribusiness for CommBank, the agricultural sector is insulated from the pain of the credit fallout because of its operations are simpler and it can take advantage of shifts in commodity supply and demand. Investing in agribusiness is generally a long-term proposition. Many projects go for 20 to 40 years. There are a range of benefits to investing in agribusiness, including higher returns, tax benefits. Investing in sustainable agriculture helps the Australian economy, and investments can start with only a few $1,000s. Again, I've got a separate information sheet on agribusiness, so if you'd like more information on that, please check out the website. And fourthly, today we're talking about shares, managed funds and margin lending. So shares can provide significant capital gains through increases in share price over long term, also dividends through the year. So investing in shares offers a number of tax advantages. The main one is that franked dividends with imputation credits. Most companies pay tax at 30%, which are passed through to the individuals as tax credits. If you are in the 15% bracket, you'll receive a refund. If you're in the 30% bracket, you effectively pay no tax on the income on these dividends. If you're above 30% tax bracket, well then you'll need to pay top-up tax. If you decide to use margin lending, the interest you pay will be tax deductible, and usually a greater amount than the returns on the shares, similar to property. For example, generally interest rates on margin loans are about 10%, and dividend yields are 5%. Therefore, you have a tax loss, as the interest you're paying is greater than the dividend you're receiving. Keep in mind that you have these franking credits, so again, you're going to get a tax refund for those franking credits because you've got a loss, a tax loss. So, capital gains on the eventual sale of shares may also be eligible for a discount if you've held the shares for more than 12 months. The discount rate is 50% for individuals and trusts and 33% for super funds. companies are not eligible for any capital gains tax discount. So again, if you've held the shares in the right structure, there can be some significant tax savings in the future. So each of these four options uses leverage to assist in increasing wealth. That's a common fundamental principle of wealth building. So before you decide to take an investment strategy, come and talk to us. We'll advise you on the pros and cons of each investment strategy for your personal situation. Our goal at Morris Accounting is to discuss these options with our clients at least once a year, before 30 June, let alone during the years, to help you get the best refund whilst increasing your wealth. We have a group of professionals working together who will be able to advise you on these matters and assist in all facets of these areas. So for more information, watch another video. Have a look at our website for some more articles. But the easiest way to get in contact with us is email info@morrisaccounting.com.au. Look forward to helping you soon to increase your wealth and reduce tax.